Hey, welcome to Oz.Fx, and today's video is going to be about candlesticks and the difference in candlesticks and everything about candlesticks. I'm going to try to limit my use of the word candlesticks, but just in case, count how many times I use the word candlesticks and comment it down below, because it may happen a lot, but I'm going to try and keep it to a minimum. So one of the first questions that people ask whenever they get into Forex is, how do I read these charts and what are these things right here? Well, these are candles. Is that there's two different kinds, two different types, and they are bullish candles and bearish candles. Okay, and the difference between them is a bullish candle indicates buying, and a bearish candle indicates selling. So it's a downwards candle, and then obviously a bullish candle is an upwards candle. That's why you hear people saying bullish market, bearish market. Bullish market is when the market is going up, and a bearish market is when the market is going down. The concept of candlesticks really isn't that complex, so I don't want to make this more than it needs to be. So if we hop over here and look at these candlesticks, the first thing that you need to know is that in a bullish candle, the open, like so where the candle starts, is at the bottom and the close is at the top. Opposite for bearish candles, the open is at the top and the close is at the bottom, and then another candle is printed, and then if it's a bullish candle it goes up, and then whenever it closes it stops here. Back over to the notes, there are two different parts of the candle. Every candle should have a body and a wick, and the reason for that is it's a way to kind of determine where most of the volume is in the candle. So if I zoom in here to these candles, the way that this happened is this candle opened here, it went down, and there wasn't a lot of volume, and it went back up, and it went all the way back up here, and then came back down and closed. And to put this into a little bit better of perspective for you is there's different time frames that you can look on. Whenever you're trading, you can go from the hour, the 4 hour, the daily, the weekly, the monthly, and the concept of these candlesticks is that whatever time frame you're on, so right now I'm on the hour time frame, every single one of these candles is an hour. So most of the volume of this hour right here was in the body of this candle. Same over here, this has almost no wick at the top, but if you zoom in there, you can see there is a very small wick right there. And then so if I go to a 4 hour time frame just to show you, it looks a little bit different, but it's showing me the same data. Daily, showing me something different, but it is still the same data. It's still the same movement. It's just now every single candle is a day long. So in this entire day here, this candle opened up here, it went up for a little bit, and then went all the way down here, and then it retraced back up and closed here, and then the next day the candle opened here, went back up, it continued to go back up, and then it went all the way back down here and closed bearish again. When you normally open up TradingView, your chart's not going to look like this. Your candles are going to be green for bullish candles and red for bearish candles. That being said, you can switch your colors around to whatever you want on TradingView. You can switch your backgrounds, whatever you want. So the most important part of the candle is the close. The most important part of the candle is the close. And why is that? It determines who won the battle of that specific time period, or session, or candle, however you want to look at that. So for instance, just to put that, this entire hour it was bullish, this entire hour it was bearish. It's to go any more into detail about candlesticks, I would just be beating a dead horse and making it more complicated than it really is. And when it comes down to it, candles are just the measurement of the data that we are looking at. There is a lot more that I could get into, like candlestick combinations. I will cover real quick, there is different strengths to every candle as well. Not every bullish candle is a very strong bullish candle. As you can see here at this little range of a bunch of little doji candles. Doji candles are very small bodies and long wicks. Most of these are like that. And this is a pin bar because it's to the upside. And then a hammer. No, that's the hammer, and this is the pin bar. And then this is the doji. And there's all different kinds of dojis, but when it comes down to it, it doesn't matter. All that you need to know is that this is an area of indecision. There are engulfing candles right here. All that means is that this entire candle engulfed this, it's what it sounds like. So if you were taking notes, there's engulfing candles and doji candles. There's also all kinds of different candle combinations, which candle combinations we will cover in a later video. There's strong bullish candles, there's weak bullish candles, same with bearish. Another thing is whenever you see a lot of wicks, that often signifies an area of a lot more volatility. Whenever you see more bodies than wicks, that means the price was significantly moving in that direction. But like right here, obviously that's a lot of indecision. Yeah, I think to go any farther, I'd really just be beating a dead horse and making this more complicated than it needs to be. There's all kinds of different charts that you can use, line charts, but that's not what this video is about. This video is about candlesticks, so we're just gonna stick to candles. All right, thanks for watching. Thanks for tuning in to Oz.Fx. I hope to catch you on the next video.